On Thursday, during the Asian trading session, spot gold pulled back slightly following the sharp rally of the previous trading day, maintaining a range-bound and steady trend without obvious one-way fluctuations. The afterglow of the strong non-farm payrolls data from the previous day lingered, coupled with a slight decline in safe haven sentiment in the Middle East. Gold prices temporarily lacked upward momentum. Market attention has turned to the U.S. January CPI data to be released on Friday. Before the data is released, investors remain cautious, making it difficult to break the short-term range-bound pattern. Long and short forces are balanced on the market, leading to the short-term range-bound trend. On the bullish side, tensions in the Middle East have not eased, and safe haven buying still provides basic support, combined with the long-term positive factors of central banks around the world, increasing their gold reserves and the strong performance of gold prices, with a cumulative increase of more than 17% so far this year. Part of the pullback pressure has been offset on the bearish side. The afterglow of the non-farm payrolls data has led to a convergence in interest rate cutting expectations. U.S. Treasury yields are running at high levels, and the U.S. dollar index is slightly strong, exerting limited pressure on gold prices. The U.S. January CPI data to be released on Friday is the core factor affecting short-term gold prices. The market expects both the overall and core inflation rates to drop to 2.5%. If the data meets or is lower than expected, it will be bullish for gold prices to move higher. If the data is significantly higher than expected, it may trigger selling pressure. Investors are cautious and trading volume is sluggish, further consolidating the range-bound pattern. From a technical perspective, spot gold is in a short-term range-bound adjustment with a delicate balance between long and short positions. The RSI index is in the 52 to 57 range without overbought or oversold signals, indicating a balance between long and short forces. The red column of the MACD indicator has shortened and the momentum has shrunk, showing that the previous upward momentum has faded, but the pullback momentum is limited, and the short-term range-bound adjustment trend is expected to continue. Sluggish trading volume is consistent with price fluctuations, reflecting strong wait-and-see sentiment in the market. Key support and resistance levels are clear. Support levels, short-term focus on $5.43 near the short-term moving average with certain support. Strong support at $5.20, an important recent support level, a break of which will lead to a decline to test $5,000. Extreme support at $5.00, a psychological level plus important support, a break of which will break the long-term strong pattern. Resistance levels, short-term focus on $5.072 near the previous high. Core resistance at $5,085 near the high of the previous trading day. Failure to break through, which would maintain the range-bound trend. Strong resistance at $5,100, an important integer level, a breakthrough of which will break the range-bound pattern and open up further upward space. All content is for reference only and does not constitute any investment advice. If you trade based on this content, you should bear your own profits and losses. Please subscribe, like, and share. Thank you for watching.